Good morning, ladies and gentlemen, and welcome to CELEBRUS Technologies PLC Capital Markets Day. Throughout this recorded presentation, investors online will be in listen-in only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today, and we'll publish those responses where it's appropriate to do so. We'll shortly submit a poll, and I'm sure the company will be most grateful for your participation. I'd now like to hand over to CEO Bill Bruno. Good morning.
Thank you, sir. Good morning, everybody. Thanks for joining us, both virtually and remotely. We've got a fun agenda. Obviously, for those of you in the room, you don't have to log into the application to ask your questions. You can just raise your hand and we'll just repeat them to the audio so that everybody that is virtual gets the benefit of hearing what it is that you're asking, just to make sure the audio is working. Really appreciate everybody taking some time today. We've got a fun agenda. As always, we'll start with a financial update from Ash. I'll give you a bit of a business update, as this is our first capital markets day at CELEBRUS Technologies PLC. So we have finally now simplified the brand and aligned under CELEBRUS and behind CELEBRUS as the sphere of our business. I'll talk a little bit more about that and how we're going to market. We've brought Ant Phillips, who's the smart person in the room, who will walk through some of our product updates. And we have a video, and I'll just warn you now, we've got some technical difficulties with said video, where it's only audio. So we all listen to podcasts, so we'll just pretend it's a podcast. The video itself will be uploaded online, so you can watch and see Lee from Merkle and the interview that we did with him if you so choose. But the audio is the most important thing anyways. And yeah, that's the agenda. So with that, I'll turn it over for the most exciting part, the financial updates. Come on, Ash.
What a build up.
Yeah, you're welcome.
Thanks, Bill. So I'm going to run through quickly financial highlights, and then we'll go into a bit of detail around each of the financial statements and just talk about how they impact their impacted by business. So on the financial highlights, you'll have seen that the annual recurring revenue increased to 17.4 million during the period. That compares to this time last year of 15.8 and a year-end figure of 16.7. And as you'll have seen in the statement a few days ago, we anticipate the ARR growing on a periodic basis, period to period. Total revenue went up to 13 million, and I'll go into a little bit of detail and the dynamics behind that. That was in comparison with 8.1 million at this time last year and 21.4 million for the full year last year. And I'll talk a little bit about the first half and the second half weighting. Software revenue, which is a key metric for us now, went up 18% to 7.3 million. We're using software revenue as a key metric to distinguish from total revenue, which includes hardware revenues. And there's a reason for that, and again, I'll explain that in a few moments. The gross profit margin was 37.4%. That was low in the first period, as it often is this time around, due to a high element of hardware in our revenues. But I'll talk a little bit about the underlying software gross profit margin as well, and I think that's a little bit more important in terms of understanding the scalability of the business. For the first time in quite a few years, we showed an adjusted PBT profit, just 0.2 million, but that compares to a 1.3 million loss this time last year. And that equates to 0.56 pence of earnings per share. Cash position at the period end was 14.7 million, and I'll talk about the dynamics of our cash balance and working capital and how that sort of fluctuates month to month. And then finally, we paid a dividend of 0.92 pence per share. That's up 4.5%, and I'll talk about the use of our cash over the medium term. So, going to the income statement. For the first time, the final results last time, we split out the software revenues to highlight the underlying sort of growth in the business. As you know, we have quite a high degree of fluctuation in headline revenues from hardware sales. In some periods, hardware revenues can be 2 million, in some periods they can be 7 million. So that sort of distorts the headline revenue. So we're focusing on software revenues as being a key metric. And in this period, they're up 17.7% to 7.3 million. The gross profit margin was lower, as I said, at 37.4%. But we are looking, as I said, at the software GP percentage as being more representative of what's happening underlying in the business. So the software GP percentage is 56.4%. And we would expect that to go back for the full year, as it was last year, to the high 60%, and in due course to go to 70% and beyond. The OpEx increased to 4.9 million compared to 4.5 million this time last year. I spoke last time about how we'd spent the last financial year restructuring the business. We invested a lot into systems, so a new finance system, a new CRM, a new HR system, a business manager, a contract manager. From those, we were able to extract lots of efficiencies, and so the headcount we saved from those investments was then redirected to the front end into sales and marketing and setting up a customer success team. So last year we held OpEx flat, also with a headcount of 150. But now, having done the restructuring and they've got a really solid base within the company, we now see investment increasing and OpEx increasing in the coming periods. So we've seen the start of that increase now. In the second half, what we'll see is a full half impact, if you like, of headcount additions in the first half. And what we'll also be doing in the second half is looking forward to FY25 and the investments we need to make ahead of our year end now to be able to deliver increased revenues and numbers for FY25. So you will see that OpEx going up in the coming periods. The adjusted PT, 0.2 million, that was assisted by our finance income. So we have good cash balances and we invest those very wisely. We're very proactive around that. And so obviously during a period of volatility over the last 6 to 9 months, with interest rates quite increasing, but also fluctuating between short-term and long-term investments, we've been very proactive and managed to generate £300,000 net from our cash balances. The annual recurring revenue, as I said, has gone up to 17.4 million, and the reported adjusted diluted EPS was a loss of 0.56, profit of 4.56, and the dividend, as I said, is 0.92 pence for the period. Coming on to the balance sheet, consolidated statement of financial position. So the major changes in the period were really around the debtors and the creditors. So at the last year end, we talked about how a couple of deals had slipped through from the last year into the early part of this year. And that was the reason for the shortfall in revenues last year. So what we've seen in this period is that one of those deals, which had a very high component of hardware, was signed in early August. And so what you see in the balance sheet at the half year end is a very high sort of trade debtor balance within the trade and other receivables. But conversely, you also see a high trade and other payables balance relating to that hardware. So if you remember, the shortfall was around 6 million, and of that, around 5.7 million was hardware. So that's why you see the trade and other payables going up, and the trade and other receivables also increasing. And those positions are in the process of reversing now, so we will be receiving cash shortly. As a side point, you may be aware that we don't generally have bad debtors. Most of our customer base is large, profitable multinational businesses, so we tend not to have bad debts, but payment terms are generally anywhere between 45 days and 90 days, depending on whether we're doing it direct or we're doing it through a partner, and in this case it was through a partner. The final point I'd make really around the assets held for sale. So this is an item we introduced at the last year end, moving out of property, plant and equipment and into assets held for sale. This is our London property of £3 million valuation. So this has been on the market. We now have offers which we're negotiating, and these come from a wide range of types of buyer. And of course, with any property sale, there are pros and cons to the structure of the deal. So we're working through that, and we'll be announcing further information in due course. And finally, on cash flow. So the main items in the cash flow, I think the first thing to draw to your attention was really the movements in working capital. And I should explain again really about how we recognise our revenue and how we do our billing. So a typical CELEBRUS contract will be a 3-year contract, and that will include a high proportion of license revenue, an element of support and maintenance, increasingly now an element of CELEBRUS Cloud, which we launched a while ago, and then a very small element of services. And how we recognise revenue on that is that the services will be recognised on a percentage complete basis as we implement the CELEBRUS platform, and that's typically over around sort of 2 months or so. The support and maintenance and the CELEBRUS Cloud will be recognised evenly over those 36 months of the contract. The license is a bit unusual. We issue the license for a 3-year contract year by year. So at the time of signing, on the first anniversary, then for the second year, and then on the second anniversary for the third year. Now, under IFRS 15, once we've delivered the license, our obligations are fulfilled. So we're required to recognise the whole of that license revenue in the month we deliver it. So that does lead to some distortions, if you like. This isn't really a SaaS kind of model. So that when that license revenue is recognised can have an impact on a period to results, depending on whether we recognise it in month 1 or month 6 or month 7. Equally, coming back to working capital, the significance of that is that when we sign a new customer or we do a renewal for a 3-year renewal, we will bill the whole of the first year in one lump sum. And then similarly at the first anniversary and the second anniversary. So the billings fluctuate quite markedly month to month. So there will be months where we don't have any renewals, for example, or a new contract, and we might bill perhaps less than $500,000. And there'll be other months where we do have significant billings, which could be $5 million or more. So the position of working capital and the fluctuations at a period end really come down to the number of renewals and the number of new logos, or sometimes some upsell as well in a particular period. So you will continue to see that fluctuate quite markedly. And of course, for this half year, it's been affected also by this large contract win with a high degree of hardware revenues. On the cash generated from operating activities, nothing of any significance. We have depreciation and amortization, of course. We have share-based payments. And then moving down to investing activities, we have a very low CapEx requirement within the business, like most software companies. We also tend to capitalise a very small amount of R&D. Now, we would rather not capitalise R&D. We'd rather have it go through the income statement. We believe that gives you a much cleaner income statement. It's easier to understand. And we're also aware that there is a reputation among software companies of capitalising R&D to flatter the P&L and take costs out and capitalise them. However, under IFRS, we are required to capitalise a certain amount of R&D, and that comes down to sort of the nature of the R&D. So we have an R&D spend typically in the year of around £2.4 million. And off that, we're capitalising somewhere around sort of £400,000, depending on the type of R&D that it is. And then finally, on financing activities, we pay a dividend. So this £856,000 in this period is the final dividend from the last financial year. You'll see in the comparatives, like this time last year, we had paid 6.2 million. And that was in relation to the special dividend we paid, which was 12.5 pence per share, roughly £5 million. And our cash balances were quite healthy at that time. Purchase of own shares. So we continue to have a share buyback program, and the reason behind that is principally to negate the dilutive effect of share options and LTIPs. This isn't a particularly proactive share buyback program, so we're not going out seeking shares, but they will be mopped up by our broker, typically at the end of the day. And as I said, we'll take those up to a certain level to net off the effect of dilution. So that brings us down to the movement in the period of £2.5 million and balance of 14.7. And that balance, as I said, fluctuates period to period as we look forward to the rest of the financial year with the billings that we've got now outstanding at the year end, at the half year, and also as we look forward to the second half and the kind of the nature of our billings typically being second half. So you've seen from previous statements that we do have first half, second half imbalance, if you like, in that second half revenues are generally higher than first half revenues. That will never be 50-50. We're trying to move it to typically around 40-60. But what that also means is because a lot of those revenues are related to license, that's what gives us that bias towards the second half. And then similarly, with that recognition of the license and the renewals, that also means we have a higher amount of billings in the second half. So typically, you will see our cash balance at the year end being higher than it is at the half year. And that's it.
So before you step down, Ash, we had a question that I think might as well just answer right now around software gross margin and our improvements in that. Perhaps you could speak to what's included in the costs that go into how you're calculating the gross margin for software margin currently, and can you also explain sort of how we view the margins across the various things that come into software revenues?
Sure. So yeah, no, good point, good question. And it is important to sort of know the margins on each of our revenue streams, because as you look forward to what the company might look like in 3 years' time and how the income statement will be affected, it's important to understand that. Now, the margins we have are fairly typical for software companies. So on a license, typically you'd be looking at around 85% gross margin. On support and maintenance, typically you'd be looking at around 65 to 70% gross margin. And then on services, typically you'd be looking at around 40%. And then for CELEBRUS Cloud, which we've introduced recently, you're also looking at a similar kind of support and maintenance kind of margin of around 65%. So the blended margin on software revenues, as I said, is in the high 60%, 68% or so, and it's approaching 70, and we'll go beyond that in due course. And the reason it'll go beyond 70% is as we sell more new logos, as we do more upsell, the largest component of a new contract is license. So on a typical contract, we might have, I mean, just taking numbers out of the air, for $1 million a year, there might be perhaps sort of 700,000-800,000 of that is license, and that's high margin. And then the other 300,000 will be a combination of the support and maintenance or CELEBRUS Cloud and the services as part of that. So that blended margin will increase because as we sign new logos, as we do more upsell on existing customers, the largest proportion of that upsell and that new logos will be licensed. And so that higher gross margin on licenses will increase our overall blended gross margin for software revenues. Does that answer it?
Yep.
Good, that does. Good, cool. Thank you.
All right, thanks, Ash. There's no time. Yeah, just emails for me. All right, well, thank you, Ash. Appreciate the background there. I mean, I think hopefully what you're getting a sense of is where we're focused now. And I think there's nothing more apropos than the fact that we only have one brand to market now. Getting rid of, or retiring, I suppose is the better word, the D4T4 name, and aligning all the troops behind CELEBRUS candidly makes sense. Obviously, meeting with many of our investors, that was a constant question. There were just some things that took higher priority, all of the system changes, the people changes, the fact that we've completely restructured the business in about 19 months, built an entire new leadership team, and stood up a direct sales business, a new marketing department, et cetera. And we finally got down to the name change. And here we are, right? And so that's it's a bellwether though, because when I joined the business, it was 5 years ago yesterday. Nobody sent me a card, by the way. But 5 years ago yesterday, I joined the business. And one of the first things that I was asked was which team I'm on, right? Are you D4T4 or are you CELEBRUS? I told the company this, and I'll tell you all, I hate that, right? Because if you're viewing yourselves as different teams, if you're viewing yourselves as different mentalities, all that does is take away from the momentum and the business. It needed a strategy. It needed kind of a Northern Star to guide towards. And for us, it's that we are a software business that sometimes sells services. And that is drastically different because everything that we do, everything that we invest in, all of our engagements with customers now, the sole focus is how do we sell more license to that customer, and obviously make them very happy with that and give them value, and in turn give their consumers value as well. And our mission statement has also been quite cleared up, and hopefully, as many of you have been meeting with us over the last few rounds that Ash and I have been doing together in our one-on-ones, the brand is starting to get easier and easier to understand. But our mission is very simple. It's to improve the relationships between brands and consumers via better data. And so what does better data mean? Well, for us, and what you'll see when Ant comes up here and presents, it's about bringing our software, our people, and our processes, and in some cases, the environments that we're building and hosting, to the forefront for the brands that we're partnered with, whether they're some of the top financial institutions around the world, top retailers around the world, healthcare in the US, travel, hospitality, telco, you name it. They all have a very core problem, and that core problem is their digital data set is not up to par. They're not able to use digital data. And for us, that's the massive opportunity for the CELEBRUS platform. And we continue to innovate that platform, and you'll see some of that when Ant comes up here, because candidly, he's got all the fun stuff today. You'll see our launch of CELEBRUS Digital Analytics. You'll see some of our machine learning. You can't do a meeting without mentioning artificial intelligence at least 37 times, right, in a room these days. And for us, it's about how do we build models that take the data we're capturing for customers about their consumer interactions and help them find the needles in the haystack faster, help them get value from the platform. And so everything that we've done, whether it's efficiency and process internally, or externally in how we engage with customers is designed around making CELEBRUS easy to use, making CELEBRUS easy to derive value from, and candidly make CELEBRUS easy to buy from. Because when all of you over the years didn't understand our premise or what our business was doing, now you can probably understand how confusing it was when we were trying to sell it as well. And now we have a very straightforward sales process. We know what pain points to listen for, and it's the benefit of our marketing investment and our sales investment over the last year that has helped us learn that. And we've taken that further. So as we've talked about for the last year, we've talked about land and expand from a sales perspective, right? Which again, is not rocket science. It's just something you should do when you're trying to sell software. So finding a pain point, selling them just that pain point, and then bringing in customer success to work with that customer to help them understand all of the things they could be doing with our platform, and then ultimately upsell them and get them up and running on those things and get to improving those relationships between brands and consumers, even more so with some of the new features and functionality of CELEBRUS. So that customer success team is one that we put in place this year. I'm happy to report that team is doing fantastic. We've set up an international and a US-based team to work through our accounts. And in the pipeline today, it's probably about 80% of our existing customers have some opportunity in the pipeline already for expanding their usage of CELEBRUS. The two newest features, CELEBRUS Digital Analytics and Bot Detection, which you'll see here shortly, are both already in use in organizations. Those features went live in the summer. That is incredibly fast for the history of this business to get customers up and running on new features and functionality. And that's the MO, right? Where historically D4T4 was a company that tried to sell massive enterprise deals that could take a lot of time, 12, 18, 24 months in some cases. What we're trying to do now is sell software that still serves a very specific pain point and worry about the rest later, because it's a lot easier to sell to an existing customer than it is a new. And so our goal is to shorten sales cycles to on average 8 months. So when we're looking at our sales team's pipelines, we're hoping and looking to build a sort of a range of opportunities in the pipeline. Yes, there will still be enterprise deals in those pipeline, 1 or 2 per salesperson. But ideally, there's a significant number of pain point sales that we can move much more quickly through the pipeline. And that's ultimately the goal. And from a key win perspective, we called out several. We called out some upsells, but what I want to focus on today is what we're considering a bellwether for the business. It sort of proves the things that we've been talking about. Our newest logo is a bank in the US that purchased the CELEBRUS platform. They came to us through the website. So that shows the marketing and lead gen is starting to work as we've tested and we've been investing in those things. From the time they reached out to us till the time to close, because we now have systems that can track these things, it's amazing what you can do with data. It was under 5 months. It took about 4.5 months to close. They purchased the CELEBRUS platform in CELEBRUS Cloud, where we're hosting and managing it for them. And they utilized several fraud and marketing use cases out of the gate. They're not even fully implemented yet. And they're already talking to customer success about adding new features. So for us, that's CELEBRUS. That's what we want to be as an organization. That's what we're aspiring to be every day as we continue to make changes, as we continue to learn, as we continue to adapt. It's about listening to pain points, selling them those pain points, and driving that forward. I already covered some of these customer wins, but for us, it's CELEBRUS Cloud. You know, Ash talked about sort of the hardware revenue, and we do have legacy customers where we're managing on-premise environments for it that we've been managing for quite some time. There's good money in it. The margins aren't quite as high, and we'll continue to support those customers. But from a sales perspective, we no longer even offer on-premise as an option. Now, that being said, I'm a salesman at heart. So if a customer was to come in and say, we want to buy your software, but you have to put it on-prem and they've got a check to sign, we will do it. But in the sales decks and in the presentations and in the way that we're pitching the software, CELEBRUS Cloud is primary option number 1. And the secondary option would be the client's own cloud if they so choose. And that's it. And there's many reasons for that. And there's things that you wouldn't even maybe think about initially. But it goes all the way across the business by making this shift, because it helps us better support our customers as well. It also helps us ensure that we've got our customers on the latest and greatest technology so that they can be early adopters of new features and functionality when we bring them live. There was a sort of undercurrent in the business of a lot of clients that had been on various versions of CELEBRUS. It makes it very difficult to upsell them if we also then have to get them upgraded to the most recent version. By getting everyone on CELEBRUS Cloud, by having a standard offering that's fully automated and scalable with some of the amazing IP and development that our team has done to date to bring that to life in a very short period of time. It enables us to turn these features on overnight for customers. The banking customer that the new logo, they have the ability to trial 3 features that they're interested in. We can just flip them on like a switch for 3 months. Let them see the value of it, turn them off, and then ask them if they want to take it. Right. So for us, it's there's a lot of value there. So if we truly want to improve the relationships between brands and consumers, that's what we have to do. We have to give brands the opportunity to see what this tech that we're bringing to the market can do for them. Give them the opportunity to see some of that value, and then turn that into a commercial discussion that benefits all of you, all of us, and allows us to further develop our people, continue to develop our product, and candidly grow the business at an exciting level that we can rally around and get excited about. You'll hear a little bit later as well. You'll hear in this room. I think everybody that's virtual will actually see the video based on the testing when they're on their laptop, but we will make sure that video is posted online so you can see the video if you so choose. Lee has a phenomenal background dedicated to Dia de los Muertos, so you're not going to want to miss that. He and I, as Ash points out, have ridiculous backgrounds in our video, mine being wrestling action figures, which we can talk about later. But solution partners are a key element of our business. This is relatively new. We talked a bit about it in the summer as we made the rounds in July. But for us, we continue to invest in technology partners. We have some fantastic technology partners. We're building integrations with technologies we're not even partnered with because customers have asked us to. But where we see lead gen is through solution consulting partners, solution integrators. And that's my background. Right. When I came out of university, I founded a consulting firm that built a business around helping technologies like CELEBRUS. That was where I first came across CELEBRUS. It was called SpeedTrap back then, 20-some years ago. And those brands, the Merkles, the CX Forwards of the world, and some of the other partners that we've built, they're strategic advisors to customers. Right. They're telling them what can solve their pain points. They're on the front lines. And so arming them with the CELEBRUS capabilities, and forming partnerships like the one with Merkle that you'll hear about as the last agenda item today, we see as more and more opportunities to build sales channels without investing in sales channels. We can have solutions consulting partners out there who can build a service offering around CELEBRUS, deliver all of those services and help us scale and simply help us sell more software, then that's a great opportunity for us as a business, and that's why we're exploring that. So the last thing I'll leave you with, and then obviously we'll address questions later on, but before I turn it over to Ann, you've heard me talk a lot about data. All of the systems that we've put in place have given us phenomenal ability to not only visualize what's going to close when and where the deals are and where the revenue is coming from and what's already committed, et cetera, but we also have the ability to forecast that out. And with the current pipeline and visibility, with deals that we're already in legal negotiations with now, we feel very comfortable about the outlook for the year, and we're quite excited about it. And we're also extremely excited about where we're taking this business. So hopefully you're sensing some of that. But we are now a software company. We are all aligned behind one brand. We've completed several restructures to put the right people into the right places, and as a result, we've uncovered some phenomenal talent that needed an opportunity to shine. So we're really excited about where we're going. I'm thrilled about it. I always get asked, what are you trying to do with CELEBRUS? We're trying to take over the world. And in my opinion, our software is the best software backed by one of the most phenomenal engineering teams I've ever seen. The people that are on the front lines that are delivering these projects care about our customers to the point where we get feedback on a weekly basis from customers saying that we're the only vendor that delivers on promises. And that's the type of vendor we want to be. In many ways, we're being a software company that's an anti-software company, right? Because we want to be honest, ethical. We want to deliver on our promises. But more importantly, we want to align and put our great people on the front lines with our customers, get them access to software that truly can be game-changing for them as businesses, and ultimately drive those better relationships with their consumers. So with that, Ant, I will tee you up, sir, if you don't mind, and Godspeed.
Good morning, everyone. For those of you who don't know me, my name's Ant Phillips. I'm CTO. Maybe 20 minutes or so just to walk you through some of the new things which have come out in the last 12 months. A few slides, not too many, and then a couple of demos so you can see how it looks in action. Please ask questions as we go along. Well, where to start? So the best place to start is just to reiterate what Bill said a moment ago at the start, which is we are a software product business. We're a software business. We are a sales-led software business. And what that means is when we see an opportunity, we go after it. And that's really how to tee up the two things I'm going to show you this morning. In the last 12 months, we've seen two clear opportunities, one around digital analytics, which I'll talk about in a bit more detail in a moment, and also bot detection. Bot detection is one of those things that has lots of different names, non-human traffic, invalid traffic, that's the term that Google uses, bots to everyone else. I'm just going to walk you through those things and why they are so interesting in the market at the moment. Before I dive into too much detail, let's just set the scene for what CELEBRUS is. And it's actually these things. We don't talk so much now about CDP and FDP, some of those acronyms, they've become very confusing to people in industry as they've got bent out of shape really for what they actually mean. So we just talk about CELEBRUS now and all these capabilities of what the product can do. We can do a lot in marketing, that's our heritage of course, going back many years. Increasingly over the last 3 years, more and more in fraud. Banking customer that Bill mentioned a moment ago is right in there with a lot of fraud interest and use cases they want to deliver, really good for us. But also some other things, CDI for Salesforce is how we work with Salesforce Marketing Cloud, really strong partnership there. And CX Vault, our unique patented technology, which allows our customers to work with their customers who have opted out, who have all those privacy concerns, but they still need a relevant customer experience, even though they've opted out of all data collection. And then the really new thing over on the right-hand side is digital analytics, CELEBRUS Digital Analytics, CDA. And it's all built, of course, on the CELEBRUS platform, including the bot detection. And that really comes back to something which we've been signaling for the last year or two, really, which is we've always had the best technology for making it really simple to collect rich data from visitors to companies' websites, mobile applications, and so on. We also want to start using that data more to add value to the business. And running machine learning models which detect bots is a valuable thing for the businesses we work with. Being able to provide digital analytics is a valuable thing that uses our data, that uses our platform. So it's about moving up the value chain, if you want to think of it that way. It's not just about getting the best data, it's about activating it as well. Okay, so where does CDA come into all of this then? And actually, there's a whole bunch of reasons in the industry which have made digital analytics a really interesting space to be in. And it's not lost on us, the irony here, which is web analytics or digital analytics is something that we originally got into as a company back in the days when we were called SpeedTrack. This is 20 odd years ago before we became CELEBRUS. That's where we started out life actually. And in the intervening years, web analytics became really uninteresting as Google and Adobe kind of took over the world. But now, because of the changes in the privacy world, it's become an interesting space again, especially for a set of different industries like healthcare and insurance. So actually, we've kind of gone full circle and it's become a really big opportunity for us. This quote here around the HHS, the Department of Health and Human Services in the US, was about a year ago. They sent a letter to a whole bunch of healthcare companies saying, you cannot track using Google Analytics what your customers are doing on your websites and mobile applications. It is a breach of healthcare information to do that. It's a breach of personal healthcare information, PHI. And that was such a moment in the industry that I don't think people fully realized how important it was. That companies, healthcare companies, cannot use Google Analytics because they are disclosing healthcare information to Google. The same goes for Adobe Analytics. And what that created was a sudden surge of interest, which is now ongoing, to have an alternative, which has not happened in the last 20 years. It's a remarkable thing when these pivots happen in the industry. And that was it. And what's happened since then, of course, is a lot of interest and a lot of movement in the industry. And it was followed up in July this year by a follow-on piece of information guided, issued by the HHS, which is to inform 103 companies, you can search this up on the web, where they went after specific companies now saying, you are still doing this, you need to stop doing it. So immediately, there's all these companies who are panicking about how they're going to get themselves out of this situation. And this net is widening now. So at the same time, they went after 5 tax advisory companies, Intuit being one of them, saying you are also disclosing confidential financial information by using or using Google Analytics on your website. So to cut a long story short, all of that creates a really fabulous opportunity for us to provide a better solution for these sorts of companies. And that net that I mentioned is going to widen over time. Insurance could be next as a really good example. So we have a solution. We built it over the last 12 months. It's only available in CELEBRUS Cloud. We want to bring customers into CELEBRUS Cloud as a cloud platform. And it provides a complete solution, a complete alternative to Google Analytics and Adobe Analytics. Companies who still want to run things in their own environment can provide a solution for them as well, based around something called CELEBRUS Workbooks, which is Power BI and Tableau. So whichever way the customer wants to tack, we can tack with them. Either they run it in CELEBRUS Cloud, or we run it for them in CELEBRUS Cloud, or they run it themselves in CELEBRUS Workbooks. And underneath it all, as I said a moment ago, is CELEBRUS Platform. So it has all those good things that we talk about: identity graph, accurate identity resolution. It doesn't use third-party cookies. All those problems which are in the industry at the moment, we don't suffer from those. And the benefit of that is the companies can use our solutions like CDA, for example. That's what it looks like then. 3 different things. A customer can pick and choose whichever ones they so choose. So like 2 of them, the 2 on the left, Tableau and Power BI, if they're running CELEBRUS in their own environment and they have their own reporting solution, they want to do more advanced reporting, perhaps they're a bit more data savvy. For all the other customers, they can use CELEBRUS Digital Analytics and we will run it for them, and it's right out of the box. And the absolute benefit for all of this is that it takes no work from the customer. It's not some big integration project. They just ask us to stand up CELEBRUS for them, data starts flowing, and they log in and it starts working. So there's no tagging, no effort. It's really out of the box from day one. There's a bunch of sort of screenshots. Well, I'll show you these. This is what the workbooks looks like, actually, if you're running Power BI or Tableau. Lots of nice marketing-friendly data visualizations around cohorts. You know, people who arrive on your site today and buy something, when do they come back and buy something in the future? So the next cohort, how many people never come back? Lots of different sort of analytics that marketers want to know. How people arrive on the site. Do they come in from social media? Do they come in through affiliates? Are they just brand aware and search you up? Lots of different views of our data. And all of this is just out of the box. That's the real beauty of it. It takes no effort to get up and running. This is some of the newer stuff around cohort analysis, which I was just talking about. I won't show you the screenshots for CDA because actually I can just show you the video so you can see what the product looks live. So, let's see if I can get this working. Right, this is CDA. So what you see here is kind of the opening page of the application. Essentially, our customer logs into this. It's running in CELEBRUS Cloud. Data is streaming in here through their CELEBRUS instance. They don't have to do anything to make that work. We just do it all. And the first page they arrive at, this dashboard, just gives them an overview of what's happening on their websites and on their mobile applications. Very familiar for marketers. Nothing needed. So from a training point of view, it's all very straightforward. It's made to look like Google Analytics to give them a very easy transition. So when those healthcare companies come out of Google Analytics, they can just come into CDA and it's all very familiar for them. No great learning curve. So all the sorts of things you might expect a marketer would be interested in, things like visitor maps and so on. This particular demo takes us off to Texas Health, one of our customers. We're going to have a look at what it looks like on Texas Health. So I arrived on their website. We'll just switch CDA across to their domain. I want to have a look at their visitors. And once it refreshes, you'll see, it's just one visitor. So it's not, this is just a test system. It's not proper production traffic per se. You can start to see some things ticking up here. We've got some visits and so on. And then all these things down the left-hand side here allow us to, or allow the marketer to go and have a poke around and see what's happening on their website. We've got a real-time view of visitors. This is this visit here. It's called a visit log. It provides a kind of real-time view of what's going on the website. what I'm doing here is actually I'm going to go and have a look at cardiovascular part of their website, and we're going to see how that interest starts to reflect in CDA. Now, CDA is two things. It's both real-time and aggregated data. Who visited last year? Did more people visit last month than this month? That's what digital analytics is all about, understanding your audience. And here we see a real-time view, so it's down to an individual person. You can see some stuff here about how they arrived on the site, things that they're interested in. And what I'm going to do on the website here is just really engage with this bit of content. Perhaps I really want to know more about cardiovascular health. So I'm having a look through the page here. And CELEBRUS, of course, is monitoring or tracking all of this information. It's looking at what I am looking at on the website. And that machine learning is allowing CELEBRUS to say, right, yes, so Ant is showing an interest in not only in patient services, but also in cardiovascular products. And that's a really key point. That machine learning is a real value add that the product can do. We can understand what people are engaging with, and that becomes information that flows into CDA. Now at this point, having found an interest in cardiovascular health, I'm going off to see, well, how am I going to pay for this? So I'm heading off to the health insurance marketplace, and it's another part of the website. Of course, from a marketing point of view, marketers want to understand what parts of the site they're engaging with. So here I am on the site looking at the health insurance marketplace. And we'll head back over to CDA. And when I refresh this page, you'll see that the list of signals, these machine learning signals, is not just that I'm interested in patient services and cardiovascular health, but also I'm now interested in health insurance. So we're building that picture of every visitor. What are they engaging with? And once that data is in CDA, it can be sliced and diced in just an extraordinary number of ways. How many people from East Coast of the US are interested in cardiovascular products who are using iPhones? That's the kind of capability that you can just take that data and reform it in 100 different ways, depending on what the marketer, or what problem the marketer is trying to solve. Over on the left-hand side here, lots of different capabilities. We can look both at the visitors in that real-time visitor log, where they're coming from in the world. We can start to look at what the site is doing. One of my favorite bits of the application is right here, where you can do transitions. So this particular page, it's had 55 page views, and you can see that where people come into, it's probably a bit hard to read from the back there. So I'll just talk it through. You can see how people arrive on that page inbound and where they exit to. So all the way through the website or mobile application, you can really understand how visitors are engaging with the website. And it just goes on and on. There's absolutely wealth of capability down here. What people are searching for, people are downloading, also engagement, which is one of the areas that we really specialize in. So one of the disadvantages, or one of the things that third-party cookies really suffer from, is returning visitors. People interact with websites from day to day or week to week. Third-party cookies really impact the efficiency or efficacy of that. We don't suffer any of that. We really understand. If I visit a website and come back 3 weeks later, we understand it's still me. And that really shows through in some of that returning visitors and the engagement with the website. The next minute or so just walks through a few different parts of the website. Acquisition, of course, lots of marketers spend a lot of money on acquiring customers, understanding how people are actually spending their money from an e-commerce point of view. It covers all the things which you see in Google Analytics and a lot more, where the value add of what we do shines through. So this is looking at some goals, conversion events is another way of putting that. This information down here allows the marketers to drill down into as much detail as they need to. And then just to draw this to a close, media. Media is a really interesting one. So if you're a travel company, of course, you might really be interested in media, presenting videos of where someone might want to go on holiday. From a retail perspective, also really interesting. But actually, healthcare companies use media a lot. And the reason they do that is to provide videos, kind of pre-surgery videos, for people to understand what they're about to go through. So that media section of CDA actually is going to see a lot of use from all different industries, for very different reasons, of course, but still it's a really applicable part of the application for different reasons. Okay, that's CDA. So in the interest of time, I'm going to swiftly move on. Before I change tack completely. Any questions on CDA? Anything not clear? Stunned silence. Okay, cool.
I think while you're switching tack,
Yeah.
the one thing I will say is this was an idea that we had 8 months ago.
Yeah.
And it was in clients' hands 4 or 5 months later, something like that. So the speed of this is impressive, but it's also, and touched on it, but I think it's worth really calling out. I built my original consulting business. We made a lot of money off the complexity of the tools that we now compete against. In one day, we could have a client up and running on reports that would historically have taken them 6 to 9 months to create. And we do it on the flip of a switch. And what's been really difficult for marketers and brands that have run into this third-party cookie challenge is we've had a few brands that are taking this on, who came to us because they were in the dark. They had to turn off all their tech. They didn't know who was using their websites. They didn't know where their marketing investments and where that money was going. And they were, candidly freaking out about it because it's not small amounts of money. When you look at advertising budgets in the brands that we're working with, in most cases, it's the largest budget in their business, even larger than R&D. So to not have visibility into how those investments are performing it's a massive business risk. So we think this is a great opportunity for us to solve that, and it was expected because as we started to sell CELEBRUS platform as a direct business, right? Still obviously selling through partners, but going direct. We knew we would get more questions. We knew people would want to test the limits of CELEBRUS and perhaps have CELEBRUS do other things that maybe we weren't allowed to talk about because we were sitting behind a partner who wanted to sell their stuff instead. And so these types of opportunities never would have happened if we didn't start going direct and start having those conversations with brands.
Excuse me.
Yeah.
Does it take a long time to set this up in a customer and to train them to use it and to train the trainers?
Yeah, good question. So just for benefits on the people on the webinar, the question is, does it take a long time to get set up from a customer perspective and also to train to use it? So capture the answer is no to both questions. So the only thing the customer has to do is to put CELEBRUS onto their website or mobile application, which is a really very straightforward thing to do. Data then starts flowing because we don't need any integration. We just capture everything that their visitors or users of mobile applications are doing. That flows into CELEBRUS and CELEBRUS Cloud, and then we package it up and present it in the dashboard. And it's intended to be really simple to use. So it's entirely designed from the perspective of a marketer. So all the things which I was showing you there's a lot of things there. Marketers just understand that stuff. That's the world they live. They understand page views and downloads and site search and these things. That's just what they live and breathe every day. So the idea is that this is entirely self-serve. We don't have to run a training program. CELEBRUS is kind of irrelevant if you want to. The actual platform is kind of irrelevant if you want to be really brutal about it. Because what matters is what I showed you in the demo there, which is their website, their mobile applications, and then CDA, where they see what's happening. The fact that there's a whole bunch of clever tech in the middle which is doing stuff is neither here nor there. Their marketers get what they need, and their website and mobile application is providing that kind of insight using CELEBRUS. So does that help?
Yes, it does, yeah. And are you at the point of being able to just turn on more marketing spend and see increase in your clients' demand for CELEBRUS?
Yeah, and it's a really interesting area, this, because obviously this is pretty new, 4 or 5 months. We're not yet sure how many customers will only want CDA, how many customers will want the full CELEBRUS data model and CDA, or how many customers will just want the CELEBRUS data without the marketing application on top. And actually, the way we built this is that we can start at anywhere in that sort of spectrum, and then the customer can add on to it. So they might be an existing CELEBRUS customer, and then they add on CDA. We might tempt them through the door with CDA, and then they realize the value of the data, and they start to get more capabilities added on license after that. So it gives us such a range of different ways to navigate a particular customer wherever they want to start from. They can start small and relatively less expensive with CDA, and then we grow them out over time. Or if it's an existing customer, we can add on CDA. So really, really interesting possibilities.
And it's the benefit of CELEBRUS Cloud because we have full control over this. And just as a reminder too, because we've said that a lot, it's a single tenant private cloud instance for each client. There's no shared architecture. So it's dedicated to them, they own it, they control it, even though we manage it for them. So it passes all the security compliance tests in a way that other vendors can. And it's turned out to be really interesting, the sales side. Going back to your question about the marketing spend, there was a couple of CDA marketing campaigns that just went live, I think a month and a half ago, and they're some of the most interactive content we've ever had in a marketing campaign. So there's interest for sure, right, that we're looking to harness. And it's really difficult to market these days with compliance challenges. So that was a nice win for the marketers, gets them excited and gets the team sort of driving that forward. But from a sales perspective, it's been quite fun because we'll have someone come in wanting to talk about this and then, well, tell us about the rest of your platform. No, we're not going to do that. We're going to sell you this because this is what you need right now. Worry about the rest later. Like, we'll show you the rest later, because the reality is somebody that buys CDA today, like 5% of the platform. So from a customer success perspective, it's just a natural revenue growth for us. And when we've got a customer success team incentivized on 20% year-on-year growth, by selling deals like this, we're giving them the opportunity to achieve that, right? Because they can literally go in and just sell them bot detection, add that on, or sell them, something from full CELEBRUS. It doesn't matter. Sell them a fraud use case. And the way that the team has architected this in such a short period of time, has fully enabled sales to just pick from a menu and say, this is what we're selling this customer, and we have it all automated behind the scenes to get it up and running, to the point where we're going through this with a new customer where they were deciding between us hosting and them hosting. Then they saw the timelines, and we could turn the system on in 4 days from contract signature, fully lights green, ready to run. Their internal IT team said it would be 8 months. So some of these things are no-brainers, right? And it was a natural move for us to move to the cloud like this, because nobody knows our tech better than us. And people are going to look at tech and think, oh, it's going to take a long time. I was on a call yesterday where we're in final stages with another client where they were claiming it was going to take 30 days to deploy CELEBRUS on their website, which is an absolute joke, right? But fortunately, that's the only thing they have to do, and we're doing the rest, right? So it does really help us move much more quickly to the value story. And it means that we can get potentially 2 or 3 bites of the apple from new customers in the same year that they've signed. If they're seeing that value more quickly, they're trusting us as a vendor more quickly, and then we can go in and start talking to them about other features and functionality that we have across the platform.
Sorry, maybe it's a question for you possibly, but what level of ARR would you expect to generate from product?
From an ARR perspective, our starting points now in the a pain point land and expand pain point deal, whether it's CDA or something else, start in around the $200,000 to $300,000 US range on average, starting. We've got customers that have been with us for 6, 7, 8 years where that number has grown to 7 figures a year. So for us, we've proven that we can grow the customers. We know we can deliver value. So it's really just getting these things where we can, bring in more new logos, make it more exciting as a software business, and do it quickly.
Cool. Okay, I'm just going to rewind because I want to just come back to this before I talk, so that I can talk about bot detection, non-human traffic. Very different world, much more data science, data focused, machine learning focused. Bot detection is something that lives in the core platform. And the reason it lives in there is because it's applicable to all of those things on top of it. And you may think, well, how does bot detection make any difference to the marketing world? Or how does bot detection make any difference to the fraud world? And I'll talk about that. And the reason it's so interesting is because one of the points or proof points, efficacy, as analysts like to call it, around bot detection for retailers in the marketing space, is that typically somewhere in the order of 20 to 30% of traffic coming to retail websites are bots. And then you think about, well, the impact that has on the way that marketers measure what's happening on their websites, it's really impactful. So 30% of those visits to their website are not actually human traffic. They might be paying for it still. There's a great deal of pay-per-click fraud out there, ad fraud, which is a different thing we'll talk about in a moment. But nonetheless, for marketers, bots are just as much of a problem as the fraud world. And in the fraud world, bots are how fraudsters break into websites. This is a whole sub-industry
in the dark web of buying stolen credentials or breached credentials and then using bots to try and get into people's bank accounts. So for a criminal, I might buy 1 million breached accounts on dark web, and then I use those usernames and passwords to try and get into their bank accounts on a different website. That's how that kind of cycle of fraud typically happens. And the way they operationalize it at scale, because you couldn't really have people cycling through 1 million different breached credentials, is to use bots. And that's a bit of software that basically cycles through these breached credentials, just trying them one after another until they find someone who's used the same password on their bank account as they used on their retail website or whichever website had their data breached. So if you want to think of that as a warning not to use the same password on your banking websites as you do elsewhere, please do take it that way. That is really a bad thing to do, because as soon as a data breach happens, then your bank account is at risk. So let's scan forwards, and just one slide and then a video. So why have bots become an interesting thing? It's always a good question to ask. Certainly the reason why we got into CDA is because of those industry changes. So why is bots an interesting thing now? And actually, it's for a very different set of reasons. And most of it is technology driven rather than market driven, like the CDA changes around privacy. It's actually really simple to create bots. If you go to ChatGPT and ask it, create me some software, which can be a bot, it will quite happily, it's far too small to read, but essentially that's what's happening in that prompt over on the right-hand side. It will write you some of the most fantastic code, which just acts as a bot, which fires up the browser, visits a website, puts a username and password in, transfers some money out, and it can just do that all day, every day, hundreds of thousands of times a day. You scale it out to a server farm and you've got millions happening every day. You can just scale these things up so quickly that the barrier to entry for fraudsters is getting so low now because this technology is out there. You can buy software packages which are like Fraud GPT. If you search up Fraud GPT, it's a fraud package based around generative AI. It's all becoming so easy, which means that the websites, our customers, are the target. So therefore, the defences need to be upped accordingly to battle off this non-human traffic. There are actually some other interesting things happening around the world around bots. Bots used to be very much based around servers. I'd stand up a server as a fraudster and it would just batter away trying to break into different websites. Some of these malwares that you may have seen in the industry, like Genesis Marketplace, they are running on people's computers with malware. So it's the computers, the end user computers, your computers and mine, which are actually trying to break into websites, not a sort of central server farm so much. That's still there, but it's distributed bots running on end user devices. It makes them much harder to spot because it's not just one or two of these servers, it's everywhere. It's everyone's end user devices, which are where the bots are running. So that means where they used to live in data centers, now these bots are everywhere. They're on our end user devices. They look just like real users. They are a browser. They log into a website. They have cookies. Looks just like you and I do when we visit our banking website. They behave just like regular users do. They don't just go straight to the login page and try and log in to those stolen credentials. They kind of browse around, show an interest in some special offer, and then they try and break it. So they hide in plain sight by looking just like regular users. And of course, what really is driving all this is that this isn't small money anymore. These systems are scaling up to millions of dollars every year. So it's become organized crime. It's not just a little bit of money here and there. We are talking very big money, and that's driving a whole business around bot detection. And it's just as relevant for marketers, as I said, as to the fraud prevention folks. So with that backdrop, I'm just going to show you how it works. So this video starts, actually I'll just fast forward a little bit. Yeah, actually that'll do. You probably know our background in fraud now is these use cases. They are all relevant. They haven't actually changed over the last couple of years. What has changed very much in what we're doing in fraud is how we talk about the product. We've really refined, especially this year, how we talk to people about what we do in fraud. It's very different in marketing and fraud. fraud. In marketing, it's all about revenue, acquisition. How do we drive more traffic to our website? In fraud, it's all about cost. It's about managing that operational cost of fraud. Can't get rid of it all, so just managing it to a certain level. And that's something which bots very much plays into, because once people find a way into your site using bots, they scale it up very quickly. So they need the right tools and the right data, of course, which is where we come into this, to be able to kind of block it and deflect it. So these use cases, just as relevant as they always have been. So what I'm doing here, just to give you a bit of an idea of what behavioral biometrics, which is one of our core technologies, looks like in our fraud world, is going to First Direct, and we are logging in. So this is regular First Direct website. Sitting behind this is CELEBRUS and our fraud detection. Now, I just need to pause here because there's a bunch to explain here. So this application is a case management tool. This is the sort of software that's used the world over by fraud investigators as a place to just work cases, suspicious activity, hacked accounts, other things which need investigating. They use these kind of workforce management tools, case management tools all the time. This is one which is just actually an open source product called The Hive. We've integrated it with CELEBRUS. And what's happened here is when we were tracking that visit to First Direct, we were able to use behavioral biometrics to verify that visitor is who they say they are. And that's what's happening here. This identity verified is just saying, we know who this person is and they are behaving exactly like they normally do. We wouldn't normally create a case to say everything's good. A case is normally something's bad. But for the purposes of demonstrating what the product does, it just helps to kind of walk that through. And all these little blue things here, these are all risk indicators. In the parlance of fraud investigators, they talk about risk indicators. What are the risky things about this visitor? Are they coming from a different part of the world? Have they bought a new device that looks a bit suspicious? All of those things get captured under this term of risk indicators. So everything's good about that particular visit. It really was me logging into First Direct. What happens now in the video is that we change tack and we visit First Direct again, but this time we change a few risk indicators so that it is a suspicious visit. So back on the website, new visitor. It's kind of tricky to identify this because it's exactly the same computer, which is actually doing the fraudulent behavior. It adds a bit of a difficulty factor to it, but nonetheless, we're kind of logging in. We've set behind the scenes a few things about this visitor that look really suspicious to CELEBRUS. So we'll go ahead and try and log in. Meanwhile, back over in CELEBRUS, we have detected that this is a suspicious activity and the account has potentially been hacked. And that's all done through behavioral biometrics. That's the technology that underpins it. As well as providing a bunch of information about the account that's been hacked and various other interesting things, we provide to the fraud analysis tool a whole load of other things as well. So now having figured out how to break into an account, let's scale it up. And this bit of software that you see on the right here is called Selenium. And it's a very typical kind of software that fraudsters use to operationalize bots. It is a piece of software that simply acts as a real person. And that sequence of things, which is probably far too small to read there, are a set of actions it's going to do. So what Selenium does is it fires up a browser, and then it starts doing a repeated set of actions to say, right, let's go to the home page of First Direct first, and then we'll kind of pretend to be a normal user for a while, and then we'll go to the login page, we'll take some of those stolen credentials and put them in, username and password. If we break in, then we'll try and add a payee and transfer some money out to a mule account. And it'll just keep doing that, minute after minute, hour after hour, all day long. So what you're going to see when I click go is exactly that. That Selenium kicks up a browser. Now, this is not the First Direct website. I'm running a bot against First Direct just for the purposes of the demo. It would have been a mean thing to do. So this is our own website. So that's why it looks a little bit different. But basically, it's doing exactly as I said. It's doing a series of things which are just hiding in plain sight. It's showing a bit of interest in car insurance, messing around with the mortgage calculator. Sooner or later, it gets to the login page. And over on the left here, this is simply a real-time log of what CELEBRUS is seeing that visitor do. That data is being captured in real time. It's being evaluated in real time using behavioral biometrics. So in amongst all these detailed events of things that the visitor has clicked on and where they've navigated to, there's all these little biometric risk indicators saying that CELEBRUS is evaluating this visitor and seeing if the machine learning says, yeah, there's really something sketchy about this visitor, we need to raise a case in that case management tool. What the bot is doing now is trying to pretend like a regular user, not progressing too fast. Computer bots tend to progress through certain parts of the site too quickly, which makes them very easy to spot. So it's kind of taking a sort of slightly laissez-faire attitude, working its way through the website, faffing around a bit like users generally do. And actually, it's hit jackpot. So in this particular example, it's guessed the username and password, and it's got into the account. And now what it's doing is going to add a payee and try and transfer some money. So at this point, the fraudsters really having a good time. They found an account that they can compromise, and they can start to figure out how to get money out of that account. The actual break-in, though, was the hard bit. Of those million different credentials, probably only 0.1% of them are actually valid for getting into any given bank, but they found them just through that automated process. Meanwhile, back over in the Hive, in our case management tool, it's correctly spotted that an account has been hacked. And rather like I was saying with CEA, we often don't talk about CELEBRUS or show CELEBRUS much. What we talk about is the website, First Direct, and the case management tool, because those are the things that the customer really cares about. The fact that there's a bunch of clever stuff in the middle, we're figuring it all out, is neither here nor there. What actually matters is what fraud investigators are going to see, and that's the case management tool. They're going to see that an account has been compromised. And in many of the banks that we deal with, they're quite small teams. You'd think there's kind of 100 or 150 people dealing with fraud. That's really not the case. Often it's just 2 or 3 people. So if you bury them in false positives, of like 50 false positives a day, they're just never going to be able to spot the needles in amongst all the haystacks. So it has to be accurate, and it has to be really sure of which accounts have been compromised, so that those small teams of people can actually kind of follow up on the right cases. And that's why you absolutely need the best data to kind of figure this out. So that's it. CDA bot detection. Any questions? Anything else you'd like me to walk through? Yeah. Okay.
Just a broader question around when you announced, what used to be the FTP. I think you talked about finding partners in fraud management software. It looks like you've hooked into case management. I'm just wondering, kind of like that ecosystem of, because obviously the signals that your software generates, they're sort of not useless, but they use it without some, sort of decisioning or actioning type software attached to it. So I'm just wondering, kind of how is that sort of ecosystem build out, and perhaps that new customer you've won, like, how does it work? Just curious.
Yeah, so for those of you virtually, just to hear, the question was more around like the vendor partner network with fraud and what that's shaping up like in organizations. It's going to sound a bit cruel, I suppose, but we don't care so much, because what we found is as we've evolved, and Ant kind of alluded to, we've really evolved our pitch even more so going into this year as Circle, who presented a couple of years ago at our Capital Markets Day, has gotten really engaged with customers. It varies so much from customer to customer what they're using internally, that it more matters about what we do and showing them things like this, bringing it to life in a more end-to-end scenario. They're able to paint the picture for us. So we do have some vendor partners. We have folks that we continue to work with, like Quantexa. We have some others in the background that we're building and we're exploring selling together with, and that will always continue to turn on. But we're not waiting on that. For us, the platform and the data that we can provide, it's working. Even in this bot detection, which is live, I think, in 4 clients right now, which for us is a lot in a short period of time since launch, right? For those of you that have followed us for a long time, they're seeing some pretty alarming results. Upwards of 30% of their traffic being non-human. That for marketers, where they're potentially paying, Google advertising or paying their agencies millions of dollars for some of that traffic, that's a significant return on investment just from turning our platform on, because it gives them all the data they need to prove that the traffic's invalid and get various refunds or rebates or whatever the case may be from that. So for us, it's really interesting. We were with a head of fraud recently in one of our banks. And when he came into the room, he did not ask who we integrate with or anything like that. He goes, I have two questions for you that I care about. One, can you do this in real time in the moment? Which that just exhibited. So we showed him that. He goes, great. He's like, and can I actually get the data? Because a lot of the platforms out there are black boxes. And when the environment's moving so quickly, when things are changing so quickly, a black box isn't helpful if what's inside that box isn't looking in the right places, right? Because it may not pick up that that was just the same exact browser on the same exact machine suddenly taken over by a fraudster. There are so many nuances to those things with how quick that moves. And the minute something gets published, fraudsters move on to doing something else. So you're in a constant game of catch up if you try to focus on that. So it's a bit more long-winded, but I wanted to cover a few of those points because we are expanding partnerships. We're exploring that. We have consulting partners as well that we're working with in the fraud space. And we'll continue to do that. But for us, partnerships now, it's about lead gen. It's about having something that we can sell and bring to market together. It's not just a handshake to throw logos next to each other, right? So when we announce formal partnerships, it'll be because there's formal business value use cases that we're selling in the market. The rest will just show up as logos on our website or in some of the collateral or in some of the videos or in some of the demonstrations that we publish, if that helps to make sense.
But you're agnostic to which sort of case or fraud management system.
Absolutely, absolutely. What you're seeing here with Hive, it kind of goes back to the selling. It's a really good example of what Ant and team have done to support sales. Because again, as we're selling direct, customers want to see end to end more. They don't just want to see the data. Because sometimes, unless you're really data savvy and you live and breathe it all day, like you might wonder how you're going to use it, or it might feel overwhelming. So we've started to build these very specific demos that can be repeated by the sales team, and the sales team can play this video and can explain it today to you, right? And the point being is it shows end-to-end value. It shows the data coming to life. It helps people understand what that great tech that CELEBRUS has does. But to Ant's point, we don't sell the tech. We're now selling the value and the pain point, right? And we're showing how it can be done. We're not going in and tooting our own horn to talk about how great all the tech is that does it, right? Because then all we're doing is pontificating when we need to be selling, right? So it's a fundamental difference. But I love this example because it shows you some of the things that Ant and team have innovated out, thinking outside the box on how we sell a value story of what we do in fraud. Because the minute we show that to anybody in the fraud department, they get it. We don't need to worry about their lingo because they will talk. The minute they see this, they just start talking. Our sales decks, we don't have them. We have like 3 slides that we keep just in case. We go straight into the product, showing things like this just to get them up and running. Because candidly, when we talk to people, if I was to sit you down for a 40-minute sales call and I start to tell you all the things we do, you're gonna think I'm lying. Because you're gonna think it's black magic or it's smoke and mirrors. You're not gonna believe that it can do that. But the fact that we can demo it on the customer's website, show them what it would look like if they deployed it tomorrow, using all the fancy things that Ant and team have built over the years. It's a really powerful statement. So we don't have sales decks anymore. We don't use them. We just go straight into conversation. We listen. We show them the tech. And we see what resonates.
The next, using First Direct as the example, the next security stage would presumably be 2-factor authentication. Does that mean they then focus less on this because that removes that security risk?
So 2-factor authentication introduces friction into the customer journey, and that applies just as much to retail websites as a good example. So in Europe we have 3DS. Which is where you see the kind of in-screen pop-up saying, kind of, approve this on your phone. As an example, 3DS is not used in the US at all because it introduces too much friction in the customer journey. Customers drop out. Revenue is more important than fraud. You want to think of it as that trade-off. And the consequence of that is that actually there's a middle ground which CELEBRUS enables, which is sure, don't use 3DS or don't use 2FA, whatever the business policy is, but at least know which accounts have been compromised, or even do something more selective. So where there is clearly an account in jeopardy, then use 3DS for that point in time. So rather than pushing everyone through that friction, just take those very high risk situations and put them through it. It provides a much more tailored approach to that kind of risk. And that means you can actually adjust that threshold depending on the business's appetite for risk at any given point in time. If they're trying to drive down fraud, that will cost revenue. It will push people away because they haven't got their phone to hand when they're checking out, whatever that kind of situation is. But they can still push down fraud, but taking that kind of consequence of lowering revenue. If the push from the business is to get more revenue and to kind of, aside from any fraud consequences, then that threshold can go up and they can make that decision. So it creates a really agile business that can manage fraud in a very dynamic way.
It also highlights some elements of the platform that we didn't really start to promote a ton because we were behind partners solely until we launched CX Vault as an experience-changing capability in the platform. So CELEBRUS can intervene. So if we see something like this happening, I'll give you an example. We have a customer that, if that was happening and they've determined through CELEBRUS that perhaps your account's been compromised, they just remove the transfer buttons from the screen. Right? It seems simple, right? But doing that and pushing a pop-up that gives a phone number to call is enough to stop the fraudster and move them on to the next one. Right? So there's several things you can do with CELEBRUS that you'll see us talking a lot more about. But it's that intervention capability in fraud that's quite interesting because we can go end to end. We can report it. We can provide the data to verify why it was happening. And as the customer gets comfortable with the results and the accuracy of that as they deploy it, they can then start to do things with it right within CELEBRUS so that it doesn't even have to get to the case management team right away. It can just block the transfer right out of the gate. And actually, there was a LinkedIn post not too long ago that if you follow us on LinkedIn, which I urge you to do if you haven't, we shared the heck out of it because it was someone's mother that ran into a situation where her account got intervened with as she was buying, if I remember correctly, was buying a home. And it blocked the money transfer that had been hijacked and saved her hard-earned money that she would not have seen ever again, right? Because there's once it's gone on a wire transfer, it's gone. So the use of CELEBRUS data and some of our vendor partners, back to your question, Kai, enable the ability to stop that transfer. Yes.
And can you just give us a sense of some of the signals that were being picked up? If I go back a couple of years, I think you were talking about things like the location, the device. But I'm just interested in how that's moved on in the last couple of years.
Yeah, it's a really interesting question. So the question is, those risk indicators and the data behind it, how has that changed over the last year or two? And the answer is we carry on growing that out. So what we originally started with is a pretty rich set of indicators. The sorts of things which you might think of are things like where someone's coming from in the world, their geolocation, things like the kind of device they're using. And of course, these things do evolve over time. We buy new phones, we buy new laptops, we get new laptops and so on. So the risk indicators do change. And actually the data we collect does change as well. So we had support for kind of pencils, like on tablets, really granular biometric data. But these things are all indicative of how someone uses a device. So, for example, a piece of data, one data point, which is incredibly predictive, scams, is the person on a call when they're doing a money transfer? Because in almost all scams, they're being coached through some sequence of action which they wouldn't really want to be doing. But they have a very persuasive person who's saying, yeah, I'm with your bank. Just kind of go here and you're going to get a code sent to your phone in a moment, coming back to the 2FA. Just take that code and put it into the website. And they're being coached through it. So actually, if they're on a call, that's a really predictive data point of whether a scam is in flight at the moment in time. So we added a call status information, the kind of network that a mobile phone connects to is pretty stable. Like I have a home network, as I'm sure lots of you do too. That network has a name, and that's a pretty stable piece of information. Fraudsters try to hide where they're coming from by changing these things. So all of these sorts of data points gradually evolve over time as we learn more about how fraudsters work and how we can collect the right data to kind of subvert or deflect what they're trying to do. So a lot of biometric data is the short answer, kind of quite low level granular data, which helps us understand the device and how it's being used and what the visitor is doing or the user is doing on it.
The joke that happens in my household, which my wife will love that I'm saying this publicly in a capital markets day, is that had Ticketmaster had Celebrus, fans would have gotten more Taylor Swift tickets. So that's the reality of it, because we would have identified that those weren't people, and we would have stopped that from happening.
Yeah, the opposite to that is I can't get to one of the particular ticket site called AXS because it's convinced I'm a bot. So there's no
Well,
way.
they're probably using bad tech then, so send them our way as well, and we'll get the good tech.
How many children? It's just you, Andy.
Excellent. Yeah, cool.
Right.
All right, so while we try to tee up the half working video, I'll just give you a bit of a backdrop. This is the last part of our agenda, and then we'll just open the floor for questions and obviously to hang out and mingle in the room afterwards as well. So this is a gentleman named Lee Fitzhugh in Merkle. He'll introduce himself here in a moment on the black screen for those of you in the room. Those of you on the devices at home, you'll see the video just fine. And with Merkle, we've launched, and they came to us actually. And I've got a long history with Merkle. Years and years and years ago, I trained their web analytics team like 15, 18 years ago. They've gone a long way. They've got thousands of customers around the globe. They were acquired by Dentsu, one of the largest global agencies in the world. And they're out on the forefront trying to help clients better manage and measure and optimize their ad spend and their marketing investments in a world where all of these cookies are falling apart and going away. So they were quite intrigued by the CELEBRUS software, and they, with us, have jointly built a program that you'll see a lot of marketing about coming. So this is the first time we're talking about it publicly, but it's called CXM Signals. I don't name things, they do. But this Signals, Leo walked through. He's going to give you a bit of an intro and background on him. He's going to talk a bit about their client challenges and sort of what led them to CELEBRUS. He's going to talk a little bit about what intrigued them about CELEBRUS. He'll talk a little bit about the offering, and then he'll wrap up and talk a little bit about the verticals as well that we're going after and which ones are predominant. But we're excited about this because we think this is kind of the bedrock of what we want to do as solution integration partners, right? We want to find something that they're quite good at, where they're the strategic advisor for brands, bring our software in as part of that story and let them go sell it with us there at the table to help explain the tech, demonstrate it like you've seen Andy do today. But ultimately let them build an entire service program around it. So for us, it's great exposure. It's obviously a great opportunity for us to sell software, which at this point, I hope you understand is all we're trying to do. I think I've said it like 30 times today. And ultimately it gives them the ability to be profitable while allowing us to expand without having to scale up a massive services business. Because they can be the ones putting the wrapper around everything, helping clients get value from CELEBRUS, and all we have to do is just keep the lights on. So that it's kind of the benchmark of where we're going. As we mentioned some other ones in the update on Monday that went live, like CX Forward, and they're a great example of a regional partner that specializes in a very specific area. They do decisioning. So like the Pegas, the Adobes, and the Salesforces of the world, helping with cross-channel decisioning to pick what you see and where you see it based on the devices that you're using and what they know about you, right? And so for them, they're packaging up CELEBRUS as the gap the part that's missing, which is the data piece, right? So you'll see a lot of these coming from us as we form these. We'll have regional versions. We've had some regional partners throughout Europe and APAC for many years that we're getting up and running on some of the latest and greatest and revamping some of their offerings. And then you'll see some of the large global players like Merkle entering the mix as well with very specific offers. And again, it's kind of like having another sales team without having to invest in another sales team. So it's a win-win. We're really excited. I love the way Merkle thinks about the world. And so I think I've probably said enough, and we'll just let Lee tell you.
Hello, everyone. My name's Lee Fitzhugh. I'm from Merkle. I've been with Merkle now for 12 years. I've worked in the industry for 27 years. My role at Merkle is to head up a capability which we call data and martech. It's quite nice. So what we do is we work with brands to help them collect, create, consolidate their customer data. We then expose that data to various different marketing technologies, and then ultimately then our clients then use that marketing technology to then deliver compelling experiences for their customers. In terms of Merkle, we are part of the Dentsu group. Dentsu are one of the largest advertising agencies in the world. We're the largest agency in Japan, and we're the 5th largest advertising agency network worldwide. From a Merkle perspective, there's a singular sentence that describes what we do. It's a little bit of a tongue twister, but we connect, create, and curate intelligent experiences that empower individuals, build brands, and transform businesses. So if you wanted a single sentence to describe what we do, that's it. What we do at a umbrella level is we help brands go through their data and digital transformations, and ultimately that's around delivering a customer experience transformation. Now, that's a really interesting topic because that's obviously brands evolving and changing to deliver what's best for their customers. And that's in an environment where today, in 2023, the pace of change is greater than ever before. Businesses have always had to change, but at the moment, the pace of that change is accelerating. If we think about some of the things that have been going on in the world recently, we had the COVID pandemic, we had the Ukraine-Russia war, and then recently we had the explosion around generative AI, which everybody's talking about. So these things that are happening at the micro level meaning that organizations, brands are having to change all the time, adapt. And what we do is we work with those brands to try and adapt through that and ultimately make sure they stay very relevant with their customers. As I mentioned, one of the key themes here is around customer experience. I think this is really critical. So some really interesting stats that really perhaps amplify why customer experience is so important. There was a recent study that suggests that 73% of consumers agree that if they have a great customer experience, it helps their buying decisions. And actually, they'll be willing to pay more, as much as 7 to 16% more as a premium on the price, because the fact they feel so connected and engaged with that brand. So I think that's huge. However, here's the other thing that I think is really interesting there. 32%, so almost a third of consumers will walk away from a brand they love if they have one bad experience. So that's why this is so important that organizations get this right. They go through the right data and digital transformations, and they're constantly evolving to deliver those great customer experiences. The last thing I'll just say on this, just to build on that point around the speed of change and having to respond to change. 40% of CMOs think the most significant challenge right now is understanding the difference between temporary and permanent shifts in consumer behavior. And a really key and important way that brands can then make sure they're mitigating against that is understanding, knowing their customers and understand their change in behavior. Well, I think that then goes back to what is it we're trying to solve for our customers and brands. So what we're trying to do there, so this is going a little bit deeper on that theme I mentioned a moment ago around data transformation and to a certain extent digital transformation. We speak to lots of brands and they're in a situation where they perhaps have limited first-party data. Their first-party data is perhaps not connected well enough. It's not of the right quality. And ultimately what that's driving is that customer knowledge. So we can see that for that particular customer struggle, CELEBRUS can help us to collect that data at scale and actually start to build up that customer knowledge and also build that first-party data asset, either because there's a huge gap and it needs to be built up from the ground up, or to make sure that that first-party data asset is constantly being refreshed, maintained, and scaled. I think the next area is around knowledge of customers from a recognition perspective. So I guess these are the two sort of key foundations of identity, if you like. It's how much you know about your customers, and then your ability to recognize customers, which should obviously then lead into addressability. So we see lots of challenges where there's a process where visitors will come to brands and their digital assets. At the beginning, they may be unknown. There's a path to then drive them to a situation where they are known, but it's about optimizing that journey. It's about making sure that we can get to that known state as quickly as possible and break down all the barriers along the way. And there's some key facets that I'll come on to shortly within CELEBRUS technology that certainly help that. The next thing that we're seeing is the fact that to actually create a great customer experience, there's a little bit of what's old is new here. So if you think about going back quite a long time now, there used to be a situation where consumers would go and buy perhaps at a much smaller shop. In those days, it would be a shop because the websites and online was not an option, wasn't available. And when you go to buy in that shop, you would have a real one-to-one relationship with that shopkeeper. That shopkeeper would know you by name. They'd perhaps know some of your buying habits. They'd know some of your buying traits. And that would actually feel like a really great personal experience with a human being. Fast forward to 2023, we would like to now mimic that type of customer experience, the depth of that customer experience, when you're speaking to a brand, feeling like you've got that one-to-one experience. But we now need to do that at scale and obviously in a digital environment. So that's where, by using the data that we're collecting, using technology like CELEBRUS, we can actually feed that into activation tools and decisioning tools that can look at all the different permutations of products, offers, content, and just serve that up in a way that it feels really personal, really connected to you as an individual. So that's really key. And I guess the last facet really here is measurement, which is super important. So as we drive brands forward to creating better customer experiences, driving outcomes, it's really important we can measure that accurately. And with really well connected data and identity that we can collect through these type of tools and solutions, we can get to more direct attribution and more accurate measurement. So I think this is kind of really an extension really of how we can start to hit some of the gaps that we have in the market today and some of the customer struggles, but using technology such as CELEBRUS. As I've mentioned, ultimately what we're trying to do is drive outcomes for the brands that we're working with. So we want to drive outcomes like greater understanding of our brand's customers. We want to drive outcomes around orchestrating timely, relevant experiences, and we want to help our brands drive greater engagement with their customers. So we've come up with this offering that we're calling CXM Signals. So foundationally, customer experience management. So that term and that theme that I've mentioned a few times now. We've honed in on signals. It's not the only facet of this solution, but those signals are really key because it's those signals in customers' behavior and how they're interacting with brands that allow us to then trigger and curate those really great and compelling experiences. So really what CXM Signals is bringing together is the CELEBRUS technology and the Merkle services. And really where we see those two things intersecting is the Merkle services trying to then very quickly and rapidly deliver those priority use cases that ultimately drive the outcomes that I already mentioned. If we take that down a level, already spoke about the fact that one of the key facets of CXM Signals is helping brands collect first-party data and identity, and that's all about informing and driving these personalized experiences. It's also about maximizing customer identity, so that's going to be a key facet of CXM Signals, allowing brands to really recognize customers from known to unknown, as already mentioned, optimizing and accelerating that process, and maximizing customer knowledge and customer memory. I think that's a term that you and I have used before, and I think that's really important. It's allowing brands remember their customers in an intelligent way so that they can then talk to them and really make sure that they feel that affinity with the brand. So that's super important. So ultimately, that's coming together to then drive the experiences. The other thing that's super important is most of the brands we're working with nowadays are not working with a blank sheet of paper. So they've already invested in some level of technology to support what they're doing in this space. The challenge there is that in order to maximize the value from those tools and those technologies, you need to be feeding them with the right level of quality curated data. So I think that's another way that CXM Signals can help brands here. It's really feeding existing, whether it's data platforms or marketing technology or ad tech, serving up the right data to those in a really timely manner. The other thing that I don't think I've mentioned yet, but I think is super important, is it's all about outcomes. It's speed to value. It's delivering tangible business outcomes, priority KPIs as fast as possible. And I think there's some facets of this solution. So again, what Celebrus can do out the box, and then the power of the Merkle services and our expertise to really help brands to get to that speed to value fast. Some of the things that I think are super important in terms of the Celebrus technology, there are the tagging free capability. So that really allows us to deploy the technology in a brand's digital environment across their websites and apps really quickly. There's out of the box functionality that allows us to then get really close to those outcomes and those use cases. There's the true real-time capability to ensure the fact that the customer data is available in the moment. In the moment, super important, because if you're trying to create those compelling experiences, the data needs to be available to create those experiences right here, right now, when I'm engaging with the brand. And then I've already touched on how important decision is at the moment. So the fact that you've got that marketing brain, so that you can mimic that one-to-one interaction, even though in reality, it's something that you're doing at scale to many, many customers. We see that the Celebrus out-the-box functionality around decisioning and those rules-based decisions is a real kind of accelerated way to get into that particular objective. And then the other thing that's, I think, super important is the fact that within this solution, we can work with brands and we can surface personalized content for both consented and non-consented customers. This is huge because obviously for consented customers, much easier to do, but actually there's some really neat technology within Celebrus tool that allows us to also in a very compliant way actually serve content that's relevant to the consumer, and it's non-invasive, doesn't breach any compliance, but actually means that even those customers feel like they're getting a personalized experience, which I think is super important. Sure. So I'll talk about verticals, but we've really started to think about how we could segment brands into genres, if you like. So I think the most important genre, I think where we can perhaps get the most traction and where we'd focus our priority is a genre that we call visit-based. So these are brands where their consumers will visit them to make a purchase. So I'm thinking retail, hospitality, travel, automotive. I think within that genre, retail is obviously an area that we're super interested in, we might focus, but I think that whole visit-based genre is interesting. This is a genre where these brands, consumers will potentially buy a mix of products. I think this is a genre where these customers will purchase when they need something, so we need to pick up on those behaviours. I think this is a genre where customers may be anonymous or known, and it's really important, as I've already mentioned, that we can take those consumers on that journey from anonymous to known in the most effective and optimal way. And I think there's a big drive here to continuously drive loyalty and provide opportunities for these customers, these brands to repurchase, cross-sell, upsell. So I think there's lots of scope for us within the CXM Signals to really drive some great outcomes and really drive some business value here, not only for the brands, but obviously by definition, if we're making the customer experience more compelling for the brand's consumers, you know, there's a value exchange there, and they get a greater experience. I think thereafter, I think, you know, we're really excited about where we can take the journey next. So I don't know, you know, how quickly we will really crack that visit-based genre, initially focusing on retail. Thereafter, I think we can start to think about what we call term-based customers. So this is where brands, consumers are buying products on terms. And this is your classic financial services, telcos, media, where there's renewals. Again, it's all about making sure that we can drive lifetime value. And I know this is an area where CELEBRUS have had some great success in the past. And from a Merkle, CELEBRUS and CXM Signals perspective, you know, we'd love to actually make sure we're giving that due attention as well.
Lee was going to wrap up, and we'll share the video out with everybody. For some reason, the TV did not like the video, but it plays on the laptop just fine. And what he was going to wrap up with was just talking through some of the verticals that we've gone after initially. From a Merkle perspective, they're very strong in retail. So that was very intriguing for us because we've got some fantastic retail customers, some that have been public. Like last year, we had Very Group do a presentation on our behalf as well about the great things they've been doing with data. And that's a vertical we want to grow very quickly. So that's the first step is retail, then finance, and then travel in that order are the ones that we're going after with Merkle to start with in terms of customer concentration. The nice thing is that we actually came to find out as we explored that we had several joint customers already, whether that was through Merkle or whether it was through Density Agency and who's doing the media buying for several of our customers. So it's been a fast-moving target. It started a few months back, and we started getting in front of clients within a couple of weeks of meeting each other. So it was, again, very quick to value in terms of let's go sell this thing and start delivering value instead of just sitting in a room talking about it. And then from there, you'll see some formal launches and things like that after Christmas, because we start to get into kind of a slow time right now. So we'll launch it sometime in early January. But with that, we do have some questions. And so, Ash, maybe we just start with you since you're probably tired of hearing from you. So the first one was that there's been a significant shift in product and most notably geographic mix of revenue. Could you expand on the US revenue levels?
Sure. Yeah, I'll do that. Let me just point out though, that video will be online in due course with the video as well. So you will get to see the background that Bill was referring to as well, it seems. So yeah, on the revenue and the breakdown. So the question is really around the notes in the results, where we break down our revenue by type of revenue stream, so license or support maintenance, but we also break it down by geography as well. And the question here is about the increase in the US. And so the 6 million I was referring to, which is the deal that slipped from March 31st into this financial year, that was an end customer through a partner, but the end customer is in the US. And so when you look at the notes and you compare them year to year in terms of revenue by geography, that's the reason for the increase in the US revenues. It's that 6 million or so, the larger part of which was hardware.
Excellent. Thank you, Ash. I believe there was another one here for you. I can help you with this one as well. But considering the projected high cash balance at year end, including the property sale, are you looking at any acquisition work? And if not, are you considering another special dividend?
Okay, well, let me take the last point first. Please do. We are not considering another special dividend. These are kind of rare occurrences, but we felt it was appropriate this time last year. However, what we will do is continue to build up the cash balance for a number of reasons. So just to talk about how the cash is used, but as I said, probably around 10 million or so is effectively working capital. The balance at the period end was just under 15 million. Obviously, we had a high degree of trade debtors and creditors related to the transaction that I referred to. So you could say effectively a normalised cash balance, if you like, if anything's normal these days, is around 20 million. So that balance will increase as we make more profits and generate more cash. And that will be retained by the company. Obviously, we have a dividend that is progressive and we will continue with that. However, as we put in our statement, and Bill can go into a bit more detail about this, we are going to be a little bit more proactive around our M&A efforts. So over the last couple of years, we have had a number of incoming opportunities. We have a very precise list of criteria devised by the three of us, and that is what we measure against. And nothing we've seen up to now fits those criteria as well as we like, but now we will be a little bit more proactive. And that's the process clearly with those tight criteria could take 12, 18, 24 months or so.
And just to provide some color on sort of the profile, we have in mind what we would be looking for. And for us, it's an intellectual property acquisition to add more features to the platform. There are several discussions that we've had, the three of us, as well as our head of engineering, sort of where to take the product, you're starting to see a lot of more modular elements of the product that someone can take on, get quite a bit of value, and then consider the rest of the platform. You can expect to see that as a consistent driver of where we're going. And there's some things, it won't halt our innovation. We will continue to build, we'll continue to innovate. So we're not going to wait to find something. But as we're searching, we know what we're looking for. It would be a bolt-on technology capability to the platform where buying it made more sense than building it, candidly. And a lot of it would, as you might suspect, given what Ant has shared today, will be on the data activation side of things. How you use the data, how you bring the data to life, et cetera. Please do.
Yeah, so as Bill described, it will be technology led. So this is not going to be an acquisition for sort of financial engineering purposes. It will be technology. It may have a customer list, and we anticipate then having integrated that into the CELEBRUS platform, that's an opportunity for upsell to existing customers, and it's also an opportunity to give a broader offering to new customers as well. So in terms of payback, if we want to get into some of the thoughts around that, it's not going to be earnings accretive from day one, but payback probably somewhere between 18 to 24 months' time.
Are you able to put sort of valuation multiples that you'd be looking at in that?
We have a profile that we've agreed to at board level in one of our board meetings recently that we're utilizing as we go out and continue the search. As Ash mentioned, we came across some, but that we explored even in this last financial year. But when we uncovered it, it was more people than it was actual tech. Which doesn't fit the profile of what we're looking for. So we have some ideas and what we think, but to be honest, a lot of that won't get fine-tuned until we find something tangible and sort that out from there. But obviously, no debt as a business, cash in the bank, generating cash. We think that there's plenty of ways we can explore an acquisition if it makes good sense for the business. Yes, Kai.
Sorry, did you want to?
No, go ahead.
Go ahead.
We'll do one and
one,
one.
two, pause.
I'll go back to the chat window after you.
Just a quick one around sort of employee incentivization and ARR growth. And I think you mentioned that your direct sales people are, I think, sort of hurdle rates maybe of 20% growth. And I think your own LTIP is sort of 15 to 20, high 20s,
27
ARR growth.
Yeah.
Just curious, I think in the last 6-12 months, you've been tracking slightly below that. Sort of, what would you say were the main reasons? And then secondly, what's missing maybe from a sort of headcount perspective for other to kind of get back to these sort of levels? And then as a follow-on, I think and I'm not sure, the share-based comp part is relatively small. I think in the share dilution is relatively small, which I guess some people view as a good thing. But in terms of, would it not make sense maybe to incentivize more people sort of maybe at a sort of lower down the levels to take part in the share price?
So I'll cover some of that at high level, and then you fill in the gaps here. I think it's going to be a 1-2 punch to Ash, if you don't mind. So yeah, our LTIPs are driven all the way up to, as we call it, a range from 15 to 27.5% ARR growth year on year. We've had some big jumps in ARR since joining. It started at 10.6, so we've got a good jump in that revenue, and that is the focus for the business. I think more importantly, at the start of this year, we realigned everyone's incentives across the business, and this is a conversation that we've had at the RunCo level and at the board level, but it goes well beyond just Ash and I. So the management team, which is 10 people, 10 new people, and that have formed that team, have bonus structures based upon the same goals and metrics. The sales team are incentivized to sell licenses. That's where their commission comes from. So they're not incentivized to sell services, et cetera. And their escalators are based on number of new logos in a given year. So we kind of force them to think differently about how they're selling. Our partner teams are incentivized to generate leads that turn into deals for the sales team. Our marketing team is incentivized on leads. So I could go on and on and on, but we've gone through the business to make sure that everything is focused on driving sales from whatever they can control, and then tying that to the overall company success as well inherently, and our ability to hit the expected results and market expectations. Now, one of the things that we did a couple of years ago as well, from a board level and with Ash and I, is we reinstituted a more a clearer framework for share option schemes. So we actually have done what you've asked, which is incentivizing people and getting them access to share options throughout the business. And we now evaluate that at the end of each year for awards once the results publish each year. So we have a much more formal plan, and we've also brought on new people who have been incentivized right out of the gate with share options as well. So we're utilizing that as best we can, obviously within the parameters of what we are allowed to do from a dilution perspective. And that's why the share buyback program is so important, to try to offset some of that. And, as we're able to, we will continue to do that. Anything I missed on that?
No, but I'll just broaden it out a little bit, because what you're talking about, Kai, is sort of performance of the individuals and the teams within the group. So everything that Bill described is also supported by the changes we've made over the last couple of years in terms of new systems and efficiencies. What we haven't talked about today, but we have talked about in the past, is a cultural change we're putting in place as well, in terms of making this a much more empowered, accountable organisation, about the clarity of role definition in people's roles across the organisation. Of course, right now the focus is very much on the front end, and that's where we're investing in terms of sales and marketing and customer success. However, behind that, we also need to ensure that there's good scalability around delivery as well. So the reorganisations we've done, restructuring, have been across all departments of the group. And in terms of performance and delivery, yes, share options are a part of it, bonuses across the organisation are a part of it. But actually there are sort of more less tangible things which are really important as well, as we've come out of sort of lockdown over the last couple of years. Flexibility of working is really important. That's something we've put in place through hybrid working, and also the benefits package. We've taken a fresh look at all of that, and we've revamped everything around that as well. So these are really all important aspects in terms of recruitment, retention, and ultimately performance as well.
Excellent. So a couple of questions from here. Are your clients ready or reluctant to commit 100% to cloud? There's always going to be some reluctance from certain brands, but to be honest, a lot of marketing technology has been cloud first for a really long time. So like the brands that we compete with, like a Telium or an Adobe on the marketing side, as an example, or a BioCatch on the or BehavioSec on the fraud side, they're all third-party cloud-based applications. So it's not new. And ultimately, even though we're offering cloud as the primary, it's a single tenant private cloud, which is also something that these other vendors are not offering. So it's basically just like outsourcing the IT element, so that you have functional software that stays up to date, and then having the data flow into your internal environment so that you can use it. So, we think it's a strong offering, but we also, from what we've seen in the market with the new business we've closed and existing customers who've made that jump, is there's a high level of comfort from their security and compliance teams when they look under the hood and they audit everything we're doing. Because candidly, we also audit everything we're doing with independent advisors. So we have all of the certifications, we have all of the penetration test results, et cetera, and we have a security operations center monitoring all of our operations on a daily basis, which has been a strong investment. We brought on a chief security officer last year into the business and built out that team. So we'll continue to do what it takes to keep a level of comfort in our customers. And that is talked about on a monthly basis, if not weekly, internally at the management team, to ensure that we're constantly ahead of the curve in that capability. Another question, because visitor data is anonymized, can you aggregate data and statistics from your multiple customers and industry verticals and resell it? The simple answer to that is no, because doing so would infringe upon our first party nature and the story we tell. Now, that being said, we have customers that have chosen to opt into subscribing to our machine learning models. Why is that important? Because as they're using those, they get the benefits of updates to those models that may be as a result of other things that customers have done with those models. So it has nothing to do with any data sharing. None of the data ever mixes, but the enhancements we're making along the way as a result of other customers using some of these new subscription-based offerings, like CDA or like bot detection, or our marketing signals model that's been live for a few years now, and is live at almost every account these days. Those types of enhancements we are utilizing, kind of shared knowledge. And we're also exploring, we've had clients ask, they want to join kind of committees with each other to knowledge share. And that's obviously something we're happy to bridge and allow them to do whatever they'd like. It's their data, it's their system, right? But you won't see us doing any kind of data sharing or anything like that, because that's just, it just risks the ethics of what we put out in the market.
Can I add something in there?
Please do.
So one direction I think which is being explored at the moment at the government and regulatory level, particularly around some of the fraud financial crime institutions in the UK, CIFAS and Payments Association, is how data sharing could be a future weapon against financial crime. on the basis that fraudsters, when they go to one place and find that they're being deflected, they go somewhere else. So that's not there today, and there's obviously all sorts of concerns from a privacy perspective. But I think over the next year or two, that could well come to fruition. And exactly what that would look like remains to be seen. Clearly, when fraudsters break into accounts and they need to clear those funds out, that money kind of exfiltrates the system through mule accounts. So if financial institutions were able to share those mule accounts, then they could get insights which they didn't have access to before. It's a very sensitive area, this, so I don't expect it to happen quickly, and it's certainly not happening today. But I think in the financial crime world, data sharing is almost inevitable, and that will become a thing as the only real practical way to kind of help scale out.
So we got time for one more question. We'll do it from the room because we just read through several here. Go ahead.
With your modest aim of conquering the world, is the biggest obstacle that companies already have this, something they think can do this already and don't think they need you, or just getting in front of those companies?
It's getting in front of those companies. It's a great question. Just in case those that are remote didn't hear that, the comment was around our mission of taking over the world and what's inhibiting our ability to do that. And it is, I've said this before, but I think it's not an excuse, it's just a fact. We are starting, we had to start sprinting very quickly because there's things that we're missing. We didn't have marketing and branding. We didn't have PR, right? We didn't have kind of the brand identity sorted. We didn't have a direct sales team, right? So there's a lot of things that had to be done. We didn't have systems, the things that Ash was talking about earlier, to help us actually manage the business that is moving that quickly, right? To ensure everything is visible, everything's measured and accountable. So a lot of those building blocks had to be put in place, and we had to play catch up on a lot of the branding. Simplifying the name helps massively. People are starting to know CELEBRUS. We're finding people reaching out to us, the marketing, the PR. We've got a subject matter expert sort of panel, which includes Ant and others who are getting published every other week now in various journals and Forbes and various articles, people like Circle, et cetera. And it all seems to be building a groundswell. Because what we're finding is once we get introduced to a company, one way or another, we have a very powerful conversation with them. And then from there, where it might go awry is we do find someone who thinks they have it solved for, right? And there's always going to be that. A lot of the conversations where we've been successful are the ones where they've failed trying to do it and have accepted that the current way of working isn't going to get it done. And it's finding those organizations, but it's not easy. It's difficult to market in today's marketplace with all the compliance challenges around the globe. It's a little looser in the US, so we've put a lot of emphasis in that, and it's working. It's building a robust pipeline. I'm really thrilled with where the sales team's gotten and how they message and how they sell. So we really just need to get them in more rooms, and that's ultimately the goal. And that's where we continue to make investments, and we have some hires planned in this second half, as Ash alluded to set up for next year's growth, so that we can continue to drive that forward. All right. Well, I think that brings us to time. Obviously, for those of you in the room, we're going to stick around, so feel free to stick around if you've got any other questions. Otherwise, for those of you remote, thank you for taking the time. Apologies for the video issue, but like I said, that will get published online anyways, and you can see that in all of its glory. The marketing team did some effort with that, so they'd appreciate you watching it. And with that, I think I throw it back for the final word from the rest of you.
That's great. Thank you very much indeed to the team from CELEBRUS Technologies PLC. I will shortly now redirect investors online to provide you with their feedback. So if I could ask you please not to close this session, if you could please provide the company your feedback, I'm sure that'd be mostly warmly received. On behalf of the management team of CELEBRUS Technologies PLC, we'd like to thank you for attending today's Capital Markets Day, and good afternoon to you all.